Good afternoon, everyone. I am so happy that you're here. My name is Donna Palmer with Proverbs Financial Coaching, and I am a money coach that empowers women who have small businesses to gain control of their money so they can run a thriving business and have a financially stress-free life without sacrificing the things that are important to them. So I am so excited because I am partnering with other women that have the same niche as mine, really empowering these women and helping them and these small business owners who kind of get brushed over to the side or forgotten, and programs aren't always for them, and they just kind of struggle a little bit more than other people I see. And so I wanted to bring more value and education to the table. So today I have Haley Thayer with me from Residential First Mortgage, and the reason I brought her on is because she specializes in helping solopreneurs, entrepreneurs, these small business owners get into homes. Now, a lot of this group of people, solopreneurs, small business owners, they write all their income off, and then they show almost a zero income. And we can have another conversation about why you shouldn't do that later, but it can really hurt them getting into a house, or even qualifying for other things like credit cards, cars, and things like that. So I thought this would be a great conversation to have about some of the mistakes that Haley sees this group make, what they can do to make it better and get qualified, and how she can help them. So welcome, Haley. Haley Thayer is a personal mortgage consultant with Residential First Mortgage in Newport Beach, California, and she focuses on helping you understand your money and your mortgage to help you set up for financial success through home ownership. And she wants to help you fulfill your dreams in a productive and manageable way. So welcome, Haley. I am so excited that you're here and that we get to have this conversation together.
Yes, thank you so much for having me. I love what you do, and I'm just honored to be a part of this today.
Awesome. And we're honored to have you. So tell us a little bit more about Haley and how she ended up becoming a personal mortgage consultant.
Yes, of course. I studied broadcast journalism in college, and I was one of those people who went into college on the first day thinking, I know exactly what I'm going to do for the rest of my life. Well, that's not typically how it works out. And so loved every part of my career in journalism. Once I graduated, I spent 4 years in journalism and really honed my craft on communication skills, marketing skills. And I realized this is not the path for me. It's time to explore other areas of life. And I grew up with a dad and an uncle in the mortgage business. And so they've always tried to get me to come work for them. But being my own entrepreneur, I'm like, you know what? I'm good. Like I'm doing my thing. But I realized that they're really creating their own destinies in their line of work. And so that's what I was looking for. And I wanted to be able to create my own self and my own brand and help people with their money. I grew up sitting across the table from my dad talking about money. So it's never been a situation that's foreign to me, and it's an open conversation always. And I know I know a lot of people did not have that growing up. And so I really want to use those skills and those communications and talks with my dad to help people further their own wealth through home ownership, through understanding their mortgage and what they can do to further that for themselves.
I love that. And I love that your dad did take the time to speak to you, because a lot of people don't talk about it, and we end up making so many mistakes. And we're going to make mistakes regardless of what we know, but
of course,
to be able to talk to someone about that and maybe avoid some of their mistakes that they had and make our own is priceless. And I love that you want to bring that to people and just really get this conversation going, especially for one of the biggest investments and purchases that most people will make, which is their home.
Right.
So definitely a subject I believe that has to be talked about, not just about home ownership and money, but also about this solopreneur entrepreneurs being told to just write everything off.
Right.
So that they don't have to pay taxes. And, I don't want to pay taxes either. I totally get it. I'm trying to write off everything I can too, but not at the sacrifice of not showing an income that could be a detriment to me later. So yes, I love this, and I'm so happy to have this conversation with you, and that I found someone like you that really loves to serve. You come from a servant heart and just wanting to
Mhm.
bring people information so that they can make the best decision for themselves. So let's talk about maybe some common mistakes that you see this group of people making.
Yes, of course. So one of the biggest things is people try to get into homes right when they start their business. And so they've had a couple good months and they're like, "Well, I'm making good money. Let's try to get into a home." Well, unfortunately, we need a 2-year history. So when you are looking at starting your own business and growing that, if a house is in the future for you and that those are part of your goals, you need to think, okay, I need 2 years under my belt with my business, and it needs to continue to increase in revenue over those years. And I need to be able to show a lender that I have done that. So that's the number one mistake that I see. It's people coming in after 1 year of business, seeing that it's been a really good year of business, but we need to see more because as a lender and as a mortgage broker, self-employed people, it's riskier because they themselves are taking on so much risk being taking on their own business. And so it is that's the number one mistake. And I think the other mistake is just not having those conversations right up front. If you are currently a W-2 employee uh, or having some other income coming in and you're thinking, okay, in this timeline, I'm going to start transitioning into my own business, whether it's real estate investing or you've had a craft that's really formed into its own side business for yourself, that's incredible. But you want to get your finances in order first. Have the conversation with you, Donette. Help to understand, okay, where am I at today? What are my goals? And getting to that next step. And I think people are just afraid to start talking about it because and and if you just start having those conversations, your questions start to be answered and it's clarity for how you can start to move forward on those goals and those dreams of yours. So really, those are the two biggest mistakes I see. The 2-year history is a must, but we do have a bank statement loan program. So if you are in the midst of writing off a lot of your income and you can't show that on tax returns, we can take your bank statements over the past 12 or 24 months and show this is how well their business is doing. This is the income they're coming in. And we don't need to look at your tax returns. And it really opens up the door to these solopreneurs who are looking to buy property, invest their wealth wisely, and take that next step while they're growing their own business.
Yeah, that's great. And I think what you said, like, oh, I had 2 months, great, I'm gonna, go make this big purchase.
Yes.
Yeah, really getting that history going. And do you see that maybe are they running stuff through a business, or are they running everything through their personal and just writing it all off per se? I mean, you can't really write it off, but
Right, right, exactly. I see it 50-50. Some people have created full-blown businesses and are doing it that way, and some are doing it through just their own personal accounts. And it's I suggest if you are serious about your business and getting it off and running, make it a true business. Make it these are your own business accounts, these are your own business tax returns, and it takes it to that next level of being able to qualify for something like a house or a car or credit card because this is a solid business and you have plans to continue to grow it.
yeah, I see that a lot too.
Mhm.
People don't always see themselves as a business owner because maybe in their head, like a business owner, oh, I got to be making, 6 figures, or,
Right.
multiple 6 figures, whatever it is. So they don't think they're an actual business yet. And it's like, well, the IRS does see you as a business. So
Yes,
you should be
yes.
running your business like a business. And I think just this group of people, for some reason, struggle with one separating that. Um, and maybe they're walking maybe a tight line because they're not really running their business like a business. So they're putting everything on this business account that
Mhm.
isn't necessarily a business, and then you can end up in trouble, and you can end up actually paying more taxes than if you're just, doing it really legit. Even, yeah, it's a pain in the butt, but in the long run, it's better for you. And I even tell my clients, if at all possible, run payroll. Give yourself a W-2, just do it. Yes, it's going to cost you a little bit more money, but you'll even look even more a little bit legitimate. Do you think that is something you suggest as well, or something that might be beneficial for them?
I completely agree with that. And, the biggest thing that I see is some people, if they start their own business and they have the business tax returns and they start paying themselves through that, giving themselves a W-2, some people start paying themselves too much. So what I always suggest is if I see that on those tax returns, I say, okay, go back to your financial advisor, go back to Donnette and really understand where you're at with how much you're paying yourself. And yes, you are making money in this business, but the way that we look at it is we take a 24-month average and then we take out any of the depreciation of those assets as well. Sorry. So it's just really, it diminishes the amount that you can actually qualify for. And so understanding, okay, if I made $100,000 this year, but I paid myself 105, well, then technically you didn't make any income. And so it's just looking at those numbers, understanding them, and setting yourself up for success.
Yeah, yes, that's another thing. So yeah, overpaying ourselves, obviously,
Right.
we don't want to do that either, because we also want to show our business making some money.
Exactly.
But we also have to know what our business costs to run. Like, if I never got business in, what is it going to take to keep the doors open? That's another conversation for another day. But yes.
Yes, of course. Of course. Yes.
So what are some things maybe they can do to change it, or maybe some things they need to know if they're thinking about, or they just started to become an entrepreneur, solopreneur?
I think first things first is focus on your business. Focus on growing that. And what I found for my own self is once you really hone in on your skills as a solopreneur and you're growing your client base, good things are going to come. So really focus on being the best for your clients first and foremost, being that trusted advisor in whatever capacity that you're running your business in. And while you're going through that, open up a conversation with your financial advisor or mortgage advisor and start to say, hey, this is in my game plan. I want to be able to afford a home, but I also want to run my own business. How can I do that? And so I think it really comes down to, okay, I've owned my business for a year now. I've made X amount of money. Let's have that first initial conversation about what I need to produce in the next year to be able to qualify for whatever level of home I'm looking to qualify for. And I think that that's what people get tripped up on is they either see, okay, the guideline of 2 years, I'm not going to talk to someone until those 2 years are up. But the beauty of what I do is I don't get paid until I actually close a loan. And why I say that's a beautiful part of what I do is because I'm an advisor first. I'm not a salesperson. I'm looking to help you get to your end goal. Just like you. It's just really seeing the whole picture, helping them understand. And I've worked with clients for 2-3 years before they even bought a house. And that set them up for success. They felt confident in making that move and putting that amount of money down. And they knew, okay, my business is thriving right now. And it's only going to continue to go up because I've really honed my craft. I've built this business. And now I'm essentially paying myself back through finding out how to own real estate, own other assets that can keep generating wealth for me as I grow my other business.
That's a beautiful story. And not only that, but they can also save, like they don't understand
Right.
houses break, things happen. Like you
Mhm.
get in
Yes.
there and you need to have these funds available in case something happens. Because guess what? You don't have a landlord. You are the landlord.
Right.
So really, when we really talk to someone, and yeah, maybe sometimes it is going to take us 2 or 3 years,
Right.
but it gives you a chance, like you said, to grow your business and really focus on it, but also know what you need to do to get there ahead of
Mhm.
time. So it doesn't, you can break it into these little chunks instead of saying, I got to come up with $50,000. I don't know where it's going to come.
Yeah.
But, really chunking it down, saying, okay, well, I have 3 years. What do I need to do to get there? What's really feasible
Mhm.
for me? And how much house can I afford? Because I think people have to also take that into consideration because, okay, we
Right.
think about the house payment, but what about taxes and insurance? Because
Yes.
that's a big chunk of money,
A huge
especially here in
chunk of money.
California.
Yes, a huge chunk of money. And when you talk to someone, they will give you the principal and interest payment on your mortgage. But like you said, and a lot of places in Orange County have HOA dues as well. So that's something that you have to take into account. And with the current economy, with prices going up on every aspect of our world, you have to look at the picture of, yes, I have my monthly mortgage payment, but how much am I spending of my income on housing versus what I need for daily things, groceries, gas, my cell phone bill? Those things add up
And
really
life,
quickly.
and to
And life.
enjoy
And
life, right?
yes, and enjoy life. Go out to dinner, have some fun, and you want to be able to do those things comfortably.
Yeah,
And it takes some time to get there, but patience is key, especially in a market like this where there's volatility every single day. We don't know what's going to happen, but that's okay. And we've been in this situation before. It's just cyclical. It's all happening again. And we just have to ride out the storm and be patient with what we're doing because there is going to be a horizon.
absolutely. And I think also, so thinking about people buying a home and getting into a house that they really can't afford, the mortgage people that do that really are doing a disservice, and it breaks my heart to see that. But you can always upgrade. You don't that doesn't have to be
Yes.
your forever home. It could be a
Yes.
starter home, and you can upgrade to something later when you can afford more. When you kind of get this one under your belt, like what does that feel like?
Right.
So you don't necessarily have to have the dream home to begin with.
Mm-mm.
You get to work your way up there, right?
Yes. And I love that sentiment because that's exactly what I did to be able to afford what I'm living in now. I bought a townhome. I was living up in Washington and I bought a townhome with a friend of mine. I couldn't come up with a down payment on my own. I couldn't qualify for a mortgage on my own. I was working in news. They don't really make that much money, you know. And so I wanted to get into the game. I knew Seattle was a great market to get into. How was I going to do that? So I had to be creative. I had to start talking to people and be okay with this might not work out, but at least I'm starting the conversation. And it ended up working out. I gained $100,000 in equity in 3 years of home ownership. I sold that home, and then I was able to provide a home for my family that's bigger and we're going to start growing into. So that was really the only way that I was able to is just getting in the game at the level that I could, seeing the market growth and being patient. And during that time, I was at a different stage in my life. I was single. I was just kind of working and hanging out with friends. Like that was my life. And so we were able to rent out one of the third bedrooms. I was paying $500 of my mortgage every month. Like that, that took me from $1,700 in rent at my apartment, $500 just paying my mortgage off. All of a sudden, I'm saving $1,200 every single month, and I see that grow in my savings account and in my investment accounts, and I'm inspired and I'm motivated to keep moving forward. And it takes time. It just everything does, and nothing is done overnight. But I think that what you just said is get in at you at the level that you can and be proud of yourself for being able to do that. And over time, you're going to be able to move up because you made a smart financial decision and you were comfortable with where you were at and you never overextended yourself.
Absolutely. Yes. Yes, yes, yes. All the things.
Yes, yeah.
So how are you able to specifically help this group of business owners,
Mhm.
solopreneurs to get qualified to get into
Yes.
a home?
Yes. So we do a bank statement loan program. So we take a 12 or 24-month average, depending on what's better for them. They do have to have 2 years of business under the belts, like I was just explaining earlier. We don't need tax returns. We don't need pay stubs. We just really take it line by line on their bank statements, and we say, this is how much you qualify for. And it opens up the door. So credit for that is any credit of 600 or above. Um, and it's flexible. It allows you to qualify for a mortgage. And this type of mortgage is called a non-qualified mortgage versus a conventional mortgage. So what you hear on the news is the 30-year fixed rate. That's a conventional mortgage. That's what a lot of people have. On the non-QM side, it's just a different type of program, a different type of loan that's not on the conventional side of things, because this borrower is not on the conventional. They're not W-2 employees, tax returns, all those types of things. And so what's interesting is typically a 30-year fixed rate mortgage is a lot lower than a non-QM loan. Now today, they're about the same. We're looking at high fives, low sixes in interest rates for both of those types of mortgages. So some people have shied away from non-QM and they've wanted to find a way to do the conventional side, but it's actually become a point where they don't have to do that. They can still have a good rate and qualify for a mortgage without having to have all these extra materials. So it's quicker, it's easier, and it's a smoother process for people who are not on the conventional side.
Wow. Okay. Yeah, that sounds good. So the key is that they have to be at least 2 years in business.
Yes.
And what does that show? Does that show like, okay, they're kind of established? What's it for the 2 year mark?
So typically what it shows, if they were, let's say they were doing the conventional side of things, it shows 2 years tax returns, and everyone's going to need to show that. But for self-employed, it really is just showing that they're established, that they're continuing to grow this business, and that we can see a history of it continuing to grow. So the reason why we have to take an average is because we can't just take the last 2 months of what you've done. If you've had two really good months, we have to see, okay, in 2020, they made $50,000, but in 2021, they made $100,000. So their business is growing. They're going to be able to pay off this mortgage for the long haul. And that's what every lender is looking at. Are they comfortable for this 30-year payment? And most people do not keep mortgages for 30 years. The average is anywhere between 5 to 7 years, but that's how they qualify. They want to see
Well, yeah, they want to make sure you're not gonna default. They want their money back. I mean, you can't blame them. It's a loan, right?
Exactly.
Okay, well, that's awesome. So going forward, what can they do to maybe either track their finances or making more beneficial write-offs to make the process easier on themselves?
Yes. So what I would say is set up a business bank account and have those funds go into that account. And that is the easiest way for whether you're doing business tax returns or not. You should, but if you're not, that's okay in this loan program, because what we're trying to see is, okay, they have an established business and the money's not just going into a personal checking account, and it's line by line showing this is how much they make each week, each month, however the payments come in, and what you're taking out of it as a business owner. And so really that is setting yourself up for success, taking care of your credit, keeping your debts low. Don't overextend yourself on a car loan or a car lease. Really take care of paying down your credit card debt if you have that. Student loans, it's interesting because right now they're in forbearance, so no one's paying them. but we take 1% of the whole balance of your student loans against your debts. So that is a monthly payment that we have to add onto your debts because eventually you're going to have to pay those. And so it's like any other mortgage. It's being cognizant of what you're spending every month on your personal side and how much you're bringing in on your business side, and being able to show that in a very clear and concise way through business bank statements. And all of a sudden you're going to be approved because it's that quick. We just have to show the trail of documentation.
And I always say bank statements don't lie.
Literally, exactly. Yes.
Awesome. So something I like to ask my guests is, how do you want to change the world?
I love that. So I was blessed to grow up with a family that was okay talking about money. My dad is a very successful mortgage broker, and he's always been creative in his craft. So every downturn in the market, he's found a way to still make the same amount of money, still grow his own business. He's a self-employed person, and he's been through all the ups and downs of owning your own business. But what I really am thankful for my parents is just the fact that they were open about everything. They said, let's talk about it, and let's not be scared to talk about it. And what I want to do is I want to help people feel comfortable opening up that conversation, because I was blessed enough to have that growing up. Now I'm in a position where I realize no one had that. A lot of people did not have that. And that's scary. It's scary to not know your finances. It's scary to not know what your future holds for yourself. But what I've learned is if I just start talking about something, it's not so scary. And all of a sudden, what I put out into the universe, those people come to me. And whether it means I need help with my finances, or I need to understand my mortgage, or I need to understand how to take care of a baby, there's so many things where once I start talking about it and get over that hurdle, it starts to open up a whole new world. And so how I want to change the world is I want to start those conversations. And I love talking to people, and I love understanding them and getting to know them. And so I think that that's my superpower. I think that I help people feel comfortable, and in that will come the conversations of things that are a little bit harder to talk about.
I love that. That's great. That is fantastic. I think conversations will open the door to a lot of things.
Yes.
So for those that want to inquire about your services, how can they reach out to you?
Yes. So I am on every social media platform. So it's always just my name, Haley Thayer. And my website is haleythayer.com. I work for Residential First Mortgage, and we are based in Newport Beach. And so we're on Yelp. Our website for that is rfmoc.com. And I really think that if you type in my name, you'll find me, because I was in journalism. So they told me every time you type in your name, you should just pop up on Google. So that's what I tried to do.
And I'll put the information down below the recording of this video for those of you that want to talk to Haley. She's more than willing.
Incredible. And I'm not sure if we're live anymore, but that's okay. And I am so thankful for you and what you do for your clients. And I'm thankful to know you. Thank you so much, everyone.
I just wanted to say thank you so much for being here, and thank you to Haley for taking your time out and educating us and bringing your gift and so much of value to our audiences. And I hope that this brought each one of you some value and some things to think about and to consider as you look towards home ownership. My name is Donna Palmer with Proverbs Financial Coaching, helping you fund your life, fund your dreams, and unfund your worries.